Welcome to ETF Leaders, powered by the New York Stock Exchange. Joining me today is Asad Jamil. He is the Regional Vice President, ETF Specialist at Capital Group. Asad, wonderful to have you here. Thanks for joining me. And here we are at Exchange Experience.
Thank you so much for having me. Great to be here.
So now, Asad, tell me, what investor outcome or problem are you focused on?
Sure. So I think this year the conversation is all about risk. I think looking back at markets last year, really no love lost between investors and the market. In fact, it was the first time in 45 years in which we saw stocks and bonds both decline in tandem. Looking forward to 2023, I think one of the things investors were hoping for was more clarity. Unfortunately, we haven't necessarily seen that so far. Just looking at interest rate markets, for example, yield curves continue to be inverted, flashing signs of recession. On the other hand, looking at credit markets, we see spreads continue to be rather tight, signaling to us recession not necessarily on the horizon. Then of course we just had that jobs report last week, which over-exceeded expectations. Now I think the good news of all that is for those investors looking to manage risk in their portfolios, we at Capital feel it's a great time to be back in bonds. In fact, if you look at the starting yields in bonds, given what happened last year with the Fed, now is a great time. You're actually getting paid to own fixed income. In fact, I like to joke, fixed income is actually earning its last name again. When we also look at some of the diversification benefits now that yields are higher, even if we do see further rate hikes out of the Fed, the fact that we are starting so much higher should give investors some cushion and provide investors with a greater positive total return.
Okay, so ETFs. Do you have any ETFs that you'd like investors to pay attention to?
Sure, so last year we launched 9 active core ETF solutions that are designed to live at the heart of investor portfolios. One in particular, CGSD, the Capital Group Short Duration Income Strategy, is one that we're having a lot of conversations right now. In fact, we feel it has a very compelling value prop given the current environment. We feel it's doing 3 things: it's diversification, quality, and attractive income with low interest rate risk. Just to give you an idea of what it kind of looks like today, duration's 1.7, 30-day SEC yield north of 4%. Whereas if you look at the ag, for example, you're getting a yield less than 4% with a lot more interest rate sensitivity. In terms of what we're investing in, it's a lot of the higher quality things: investment grade corporate, securitized debt, mortgage-backed securities, which we feel should lead to a smoother ride and potentially greater outcome for investors compared to the yieldy category that it sits in.
Okay, so where should investors go to learn more about your ETFs and also about your 2023 market views?
Sure, so www.capitalgroup.com/ETFs. Find all the information on our ETFs and views.
All right, well, wonderful to have you join me today, Asad. Thank you very much. And that's ETF Leaders, powered by the New York Stock Exchange.